Let's now take a look at some business news. Private sector players and fiscal experts are calling for harmonization of tax policies to lower the cost of doing business. The Institute of Certified Public Accountants says Kenya tax regime is affecting Kenya's image regionally. This comes in the wake of government's plan to widen the tax base to fill a gaping budget.
With an expenditure of 3 trillion shillings, a debt of 7 trillion shillings against a debt ceiling of 9 trillion shillings, private sector players say there is a need for the government to relook into Kenya's debt position. To this end, the government has deployed a number of tax policies targeting and expanding the tax base to fund various obligations. However, investors are raising concern over these new tax measures.
We need to look at a bigger range of companies. Either this tax needs to be reduced or reduced significantly, or to look at it and say, because the government's argument has been some companies have not been paying taxes, they declare losses every year. So saying maybe look at it, if a company has declared losses for maybe 4 years consecutively, then maybe in the 5th year you can mandate that this minimum tax comes into effect.
The Institute of Certified Public Accountants is asking the government to be considerate in its efforts to fix tax loopholes. The government, however, says it is still open to proposals that will improve inefficiencies in tax administration.
The monthly rental income tax. If you were to reduce that monthly rental income tax, let's say to 7.5% or 5%, you would find so many other people would come into the base, because so many landlords either maybe some of them don't pay, and perhaps even this is where the KRA needs to do more work to bring more people into the tax base.
Currently, only 4 million entities pay taxes, even as the Kenya Revenue Authority targets to collect 130 billion shillings every month in order to meet its tax collection targets. Alanauko, Channel 1 Business.